How did Joe Biden KO tech stocks? What happens if the European lockdowns escalate? And has BHP made Woodside a big buy? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, Paul, President Joe Biden decided to put Jerome Powell in for another 4 years, and tech stocks were smashed. Explain.
Well, Sleepy Joe, reappointed, as you say.
Bit nasty.
Well, he's reappointed the Fed governor, and of course, that's probably, he's just considered to be a little more hawkish. Not much, because he's pretty dovish,
right.
but he was a little more hawkish than the dovish candidate who has been appointed as the vice chair.
Lael Brainard.
Yeah, who I must admit I didn't know much about until.
She's very brainy. She is very brainy.
Yeah.
Often quoted by CNBC and Bloomberg and whatever. Yeah, but go on.
So it was just a question of a dovish hawk versus a dovish dove, right?
That's right.
And we went for the dovish hawk. And that means that maybe the tapering might just be accelerated a little bit, which of course means that the Fed will stop buying as many bonds. It'll stop that sooner. And of course, that means the market's got to digest the current US budget deficit, which of course is being funded by the US government bonds. And that puts pressure on bond rates.
Yeah.
And that puts pressure back on tech stocks because people look at future earnings and say, well, we're going to have to discount them at a bigger rate.
Yeah.
It's a bit of sort of just, at the end of the day, Peter, it's a bit of, I'm trying to think of the right polite word. I was going to use a word starting with M that I won't. Yeah. Because it is really like that, but
what do you think that?
Anyway, we shouldn't go there.
It's a rule of thumb, which I call a rule of dumb, that when yields and interest rates go up, tech stocks get soft.
Yeah,
that's just the way it is.
Bit of rotation.
And one day we'll find a simple way to explain it to normal people, but just accept it and move on. That's what I used to say when I taught maths. If you don't understand it, just learn it.
Don't worry about it.
Move on. All right. What happens if the European lockdowns escalate?
Well, that's probably a bigger issue, Peter, for the markets, right? And of course, it could go back the other way. If we get the European lockdowns currently in Austria, we've got problems in Germany, we've got problems in the Netherlands. Okay, in
France
UK, in France it seems to be okay, but clearly the risk that as the winter continues in Europe, that maybe with the fourth wave, I think they're calling it now. And whether that spreads. So look, in that scenario, we'll go back to what's happened before, and that is that governments will provide support again, and they'll take any handbrake off things like tapering. Interest rates will come back down again.
And tech stocks will go up.
Tech stocks will go up.
That's the crazy mad world we're in.
I think we're all better off hoping that is this just something that they can deal with, and that we don't get another COVID-style recession. But clearly a watch point, and that's, again, just making markets a little bit on edge.
Yeah, and why wouldn't they be? When you go a big question mark over the future earnings of companies because of lockdowns and whatever, why wouldn't stocks come off the boil? I'm with you, Paul. I hope that they get on top of it. Then the market will be really excited. Yeah, we've learned how to avoid lockdowns. We've learned how to control this damn virus. The market will like it and it will zoom ahead. But if we don't, it could be a problem.
Markets are going to have something to worry about. And if you think about it, there are really three things out there at the moment. First of all, it's inflation really on breaking out. Secondly, does that mean higher interest rates, and just because of acceleration of tapering and so forth, higher interest rate, what does that mean for stock valuations? And thirdly, taking it the other way is lockdowns. What does that mean for growth? And are we in the fourth wave, or whatever you want to call it? So look, we've got to watch these things carefully. I mean, the market, notwithstanding all of that, US, that close to off record highs on Monday again. So it's not really pulling back very far, right? If you really are getting worried about it.
It's the home of positivity. All right, it might just be justified. It's the home of positivity. Now, finally, BHP and Woodside. Now, Woodside share price has gone up. Paul, is this a big buy?
Well, it certainly eliminated some of the negativity around Woodside. Remember, one of the reasons that Woodside has struggled this last 18 months or so, a couple of things. First, they lost their CEO. They replaced the CEO.
Where did he go to?
Well, secondly, the whole Scarborough, which is this massive, great big project in WA in terms of the gas. A final investment decision has finally been made, and that's a goer. But that whole process has taken some years. And then thirdly, of course, is the whole BHP and Woodside effectively deal, right? And the overhang that creates, because BHP shareholders will end up with Woodside scrip. Now, that overhang still hasn't gone away, but at least they've knocked off two of the big things. New CEO, Scarborough's been given a tick. Now they've got to deliver. This is really where the hard work starts.
The rubber hits the road.
But at least they've actually got those things out of the way. So that's positive to actually knock off those things.
So what you're basically saying then, Paul, is if there's less reason for these BHP shareholders to dump their Woodside, because the Woodside story gets better and better as it has this week, then they'll hang on to make the money, and therefore Woodside won't be sold off. It's a good thing for
Woodside. I mean, longer term, these are good decisions for Woodside. And I think that they described it as the biggest decision in their company's history, and that's probably true. It's taken away a couple of negatives. Now, the issue for Woodside is now got to deliver. Yeah. So that's going to take many, many years. They've got to get through, they've got governments on site, but there's a whole lot of environmentalists who don't want to go ahead, ESG issues. You've got issues around, is gas really going to be, what's its future 10 years, 20 years down the track when this thing is still producing? And then you've got the development risk alone, the billions of dollars to build this project. How's that going to go? So
you're tiring me, I'm just thinking about it.
Well, this is the really big issues for Woodside. So I think Woodside, long term, hang on to it, portfolio stock, it's relatively cheap, but certainly some of these risks, we're going to have to see the execution, and we probably won't know the answer to those questions, Peter, for some time.
Yeah, and the interesting thing is that we know coal and gas are going to be on the outer maybe in 10 years or 15 years' time. They'll be hated all the way along, but the reality is the world has to use the energy until the alternatives are ready.
The world is going to need gas from people like Woodside until all the other sources of fuel are there. We know that's not going to happen quickly. So there's going to be demand. Good to see there's a story out this morning that the federal ALP is going to support this project. Yeah. So it has the right government support. There are the crazy people who will say no. Yeah. But I think that's just one of the issues. I think the bigger issue is actually the execution risk. Can they actually build the project on the budget they've estimated, and what happens if that starts to blow up, which does this is a really complicated project, Peter. So it's bigger execution risk, and then we won't know the answer to that for some time.
And just as you were talking, I thought to myself, isn't it appropriately named Woodside? It's the core of the fossil fuel wood. Bury it, turns into oil, gas, whatever. But that's a bit of science.
That's a bit of science. That's almost as good as my M word, and you lost me with that one, Peter. But I'm sure it was absolutely brilliant.
Okay. I'm Peter Switzer.
I'm Paul Rickard.
And he's mad about money.